Type of fraud. 1. Asset misappropriation. 2. Financial statement fraud. 3. Corruption. 4. Bribery. 5. Falsification of expenses claims. 6. Stealing money from company bank account. 7. Manipulated sales figure to reach target and achieve bonuses. 8. Falsifying supplier invoices. 9. Stock theft. 10. Transaction that are not arm length. 11. Tax evasion. 12. Fictitious invoicing. 13. Acquisition of company property at less than market value. 14. Theft of raw materials. Fraud risk assessment. 1. Identify relevant fraud risk factors. Review of documentation of previous fraud and suspected fraud committed against or on behalf of organization, evaluation of related frauds. 2. Identify potential fraud schemes and prioritize them based on risk. Fraud assessment team identifies fraudulent schemes by brainstorming, conducting management view, using analytical procedure and review prior fraud. 3. Map existing controls to potential fraud schemes and identify gaps. The fraud risk assessment team identifies preventive and detective controls in place to address each fraud risk and the likelihood of potential fraud. 4. Tests operating effectiveness of fraud prevention and detection controls. Internal auditing typically plays an important role in assessing the operating effectiveness of internal control. 5. Document and report of the fraud risk assessment. Key elements that would likely be documented in fraud risk assessment include the type of fraud that have potential of occurring, the likelihood of significant fraud occurring, the business impact, significant of fraud.
Created using part2.